Hey guys, Sam here. Let's see, 2:10 in the afternoon on Friday, September 29th. And I thought we'd take a look at a couple of majors that we have not spent any time on. And there's some good lessons to be learned here. And I'm going to try and de-emphasize the Elliott counts relative to my last video, and just try and show you that it's really secondary. It's not what we want to base our decisions on entirely, and that if you don't want to pay attention to the nuance of Elliott wave, you absolutely do not need it. So I thought I went over here to our list and thought we'd look at anything with a market cap with a B, as in billion. So there are currently 11 coins, 11 cryptocurrencies that have a market cap in excess of 1 billion. And two majors are sometimes not given as much respect as perhaps they deserve because they were forks, are a Bitcoin Cash, which is sitting at 7.35 billion, needs to be taken seriously, and Ethereum Classic. So let's take a quick look at those and see if we can learn anything. So here I've got Bitcoin Cash. Right, so this is currently sitting at 443. It's been as high as 960. This is a major cryptocurrency that has a lot of positives and is one not to discount just because we get so focused on Bitcoin Classic or traditional Bitcoin. So let's just see, as you might suspect. If we're looking at the major cryptocurrencies, anything over $1 billion in market cap, you're going to have algorithmic activity. So just to make the point here, I'm going to again try and de-emphasize the Elliott and just focus on fib pulls. Well, let's just go back here to the last low before we started this move higher. Okay, well there's our first pull. Right, we go to the 618 to the tick, and then we have the explosion higher. Well, from there, we go all the way up. We would have been right. So it's always easy with hindsight, right? But so we'd have been looking at this draw and these swings here. So if trying to recreate what we'd be looking at, that kind of huge reaction, you need to. I guess the lesson here is you need to check all of these because you can't know until you see the reaction which pivot the algos are working from. I know there will be always some that will work from the extreme high to the extreme low. So if we look at that one, we can see we come down here. Here's the 50. There's the reaction. Can't get any traction. Another reaction. We start to break it. Now we go down. We get in that little pocket that you see all the time, right, between the 618 and the 65. Again, we get a little we get a pretty substantial reaction, right? It's from 480 to 720. That's no small reaction, but we aren't charging off impulsively to new highs, and of course. We'd again trying to recreate. We'd have drawn there, and the 618 and the 65. We get the 786. Could that have been a 1-2 going up? Yeah, you would have been thinking that at that time. Deep 2 still valid. 786 holds it. Looking for new highs, we don't get it. Right. So you've got it now. Even though there were some clues here when the 50 broke and we broke the 618, but we held the 65, you definitely had some clues here, and you could make the case that if this was your 2 or if this was your 2, when this broke, there was definitely evidence that we were changing trend. So let's just go the other way. Right, at that point, you'd at least be looking at these. Well, here's the first one. Right, if I park it there, we don't quite get to the 50, although you probably had a little action here. Don't quite get to the 50. They take it to the 23. Front running perhaps, or it's just too weak. Now here we go. Here's this low, and we go to the 50 to the tick. Okay, so clearly algos were sellers here. You've got a group of traders that are going to defend that, and down it goes. So we go from 720. We get to the negative 23. We go through it, and we get to 300. From 720 to 300. Right. So. Tougher for us to have taken that short. Unlikely that we would have been there. More likely, right? Even though there were some clues, more likely, given the extreme strength we'd seen here, we'd have been looking for something in here, and likely either break even, small loser, but not a winner. Okay, so now with hindsight, you can go back and say, okay, algos are pulling from here. Well, now we know it. Right? No question about it. They take some profit here and they get the reaction. Well, now we know this is an important pivot. So we're certainly going to draw from there. And we're going to go to our low. And what do we see? Okay, so they don't quite get to the 618. They're a few dollars from it, and we pull down. Now, but from here, we'd want to check that one. There's the all the way back 50 sitting up here, which is right a few dollars from the negative 618 of the secondary draw. So I'm gonna take this one off. Pardon me, that's the 786 of this draw here. Okay, so 618, a few dollars from. Now, what you'd be expecting here is this move down here to the negative 23, and we've seen this, and of course we'd have this on it, right? We would have had the expectation that we were going to get, even if I go to original, that we were going to get a push to the negative 23, all lined up to see that happen. And now this is the confusion that we're seeing across all of the majors in crypto. This expectation for a fifth that didn't happen. It was all the ingredients were there, and whether we're looking at Bitcoin Classic or whether we're looking at Ethereum or Litecoin, the majors, we have this unusual reaction here implying strength, and we don't get the push down to complete a 5-wave sequence. Right? That I'm bringing in a little Elliott into the dialogue, but the expectation, if you're just thinking fibs, is we go to the 618, we're looking for the negative 23. We don't get it. So at that recognition, you've got to start to consider the other way back. What's going on here? So we went just shy of the 618 here. We come down, we go to the 618 to the tick. Okay, so now really you'd have to say that we're stuck. We're stuck between the two. Right? So here's our box. We're in the fib fight that you will often see. So we're stuck between this. There's our 618 to 618. So what do you want to be in the market? Where is there a trade there? Well, I would suggest to you not. If you're looking for very short-term trades, and I hear I'm on a 4-hour, you may have a possibility here because this appears to be unfolding impulsively. At least you have a 5-wave sequence. So if I break this down, if I go to a 1 hour and we look at this, it starts to get a little more perspective. And let's take our little box off just because I've made the point. So we can carve out a 1, 2. I know I'm bringing a little Elliott in because it can be helpful here. Here's an example where it can help. So we're trying to decide, is there a trade here? Do we have a bias? Well, our longer term bias, we have to remain bearish below with trend, right? We've got to respect the fact that we've come up to the 618, and so the expectation would be resolution is down here at the negative 23 until we break the 618 or the 65 of this moving higher. We've got to respect the longer term trend, the fact that we did not get through it, even though we're starting to react impulsively here. We're definitely bullish below the 618, right? Until we start to see evidence or the complexity or the complexion of the market changing and how it's moving, we've got to respect this 618 because it's been respected once, and now we haven't even gotten to the 50. So is there a trade here? Well, again, it kind of depends on the time frame that you're trading. This is encouraging if you're bullish for a couple of reasons. One, this 5-wave sequence. That this could be, this issue that we have with all of crypto. Maybe it's a truncated fifth. Maybe this is simply an A wave because you can see a nice 1, 2, 3, 4, 5. So maybe that's an A. But now this is where it gets confusing. We wouldn't correct a 5 with a 5. We wouldn't. So, this is where you kind of go, all right, whoa, this is getting confusing. Okay, so maybe I take the Elliott off. Maybe I take it off and I just focus on the fibs. Well, that's kind of up to the individual and your level of knowledge with regards to Elliott wave structure, how much credibility you want to give it. This gets funky, from an Elliott perspective, because look at this move here. Is this the 5, right? You give that to 10 Elliotticians, they're going to give you a different count. Is that the 5? And this is an A expanded B down to a C. I mean, is this an A, B, C? Right? We can't correct this 5 with a 5. So is this just an A? We're going into a B. We're going up to a big C. That's where Elliott can get confusing, right? So you have to, use it where it offers advantage, and if it starts to confuse you, either move to another market, or just retreat back to the fib pulls and say, what do I know? What do I know? Well, I'm stuck between two fibs. I'm stuck between two 618s. And now I'm stuck actually between two 50s. So maybe the better move here is simply to not be trading in Bitcoin Cash, right? Until we get more clarity as to what's happening. You can note here, just let me take that off just to show you this. Right? You see this 1 high here and the 4 low to the tick doesn't overlap. Not a coincidence. That does not happen randomly. Right? So that suggests that there was one more leg up here. So A1, we don't know. We don't know. What do we know? We're between a 618 and a 618 and a 50 and a 50. Until there's more clarity here, perhaps you move to a different coin. But we hadn't looked at this, so I wanted to at least show you, how pervasive the fib draws are, regardless of the market. Especially when we're up here in the majors that are market caps in excess of $1 billion. There's going to be algos all over it, right? So can we get behind them and follow their tracks? Here you've got a group of traders defending this 618 and a group of traders defending this 618. So maybe we move to another coin. Well, let's look at Ethereum Classic and see if that's any better. Well, this is kind of a hot mess here. I mean, we've had some sort of impulsive action here, correction, confusion. Who knows? I don't know that it really matters that we get a precise count on that. What we can look for algo activity. So if I just if I go to the lowest swing I can find and go up to the high, this shouldn't be a surprise that we come to the 50, right, and the 200 period, right? So, boom, and we get the react? We don't get a new high. So, at that point in time, you'd be thinking, okay, well, there's this is the correction. Here we start impulsively. There's the 1. Maybe a deep 2, but this is starting to look less and less likely. And now your expectation would be that the top is in, and this is some sort of corrective action. And look, 50 to the tick, and then we get one more scream up higher. We do get new highs, but we don't get the target. Right? We know our target is the negative 23. We don't get that. So now the market is struggling for that. So when you see this kind of reaction and you're now coming down, you're under the 200. Well, you've got to at least consider the other side of the market. Now, this break of the 65, that's certainly bearish. So with that break, your bias now has to lean to the other side, right, to the bearish side, and we would just kind of, again, looking for algo tracks. Are they there? Can we spot their behavior? Well, we don't. It's so weak we don't quite get to the 50. We don't quite get there. It's a little front run. We go down through we get all the way to the negative 100. We blow through the 23, the 618. So a major move. All right, now we just pull from that low. We're no Elliott on it. We'd want to respect this pivot here, and look where we are. We've wicked the 200 period. The 50 is resistance. We've got this whole mess here of confusion. Likely this support here is creating some sort of resistance. So what can we conclude from that? Well, there was some impulsive structure here. We know it's got to correct in a 3, so we we have a possibility that this is a 1, 2, 3, 4, 5 down for an A wave, because we can't correct a 5 with a 5. So that if that were the case, then we would have a completed A wave before we start up in a B in the big, so now we're going forward months, not days or weeks. If that were the case, because I'm on a 12-hour chart here, let me take this down to a 4-hour, something more reasonable for us to be looking at to trade. Well, here's, this is that same thing we've seen in all the majors. Here was that expectation for this, we had the scenario here. This looked corrective into a 3-wave. We don't get the new low. That's what's creating all of the confusion now in all of the majors. Well, what's going on? What's going on? It appears to be a complex correction. So if that's the case, well, we break the 618 here, we break the 65, but the 786 holds it. So is this A, B? That's common in a B wave, and here's a C. Note here how the -23 and the 50 line up. Right, so now you got to look at that and say, well, is there a trade here? Well, this is definitely one of my majors, right? It's the 11th largest by market cap. We know there's algos in there. Could this be a 1, 2, 3 coming into a 4 up for another 5? Could be, or are you just going to respect the fibs and say, okay, well, certainly I'm bearish below that 50, and I'm definitely bearish below this 618. So until there's more clarity, you can give it some structure. Give it some structure. Clues, could you get the 618 in line with the channel? Yeah. Is there a trade here? Not for me. Not for me. This is too confusing. I'm always looking to get long if I can in crypto, and this just tells me, not enough evidence here to be. Even though there's a potential here for an impulsive structure, it's just not good enough. There's just too many other choices to choose from. Too many better setups, too many opportunities where I don't have this, two-sided story that I can't definitively pick a side. I can draw fibs, but when in doubt, stay out. Seems to be a good rule of thumb, and certainly applies to these two majors. Okay, there's 17 minutes. I'll wrap it there. That'll probably be it for the day, guys. Looks likely I'll be back to you tomorrow. Okay, have a good one.